Hello everyone and welcome back to Explain the Charts. Today is November 4th, 2025, and we are taking a close look at Amazon, ticker symbol Amazon. The stock has been making headlines with a powerful surge to all-time highs, and there is a lot to unpack between the news and the price action on the charts. First, let's discuss the fundamental catalysts driving this incredible momentum. The primary driver here is a wave of overwhelmingly positive news that hit the market in late October. Amazon reported blockbuster Q3 earnings, shattering Wall Street's forecasts. The big story within that report was the re-acceleration of growth in its cloud computing arm, Amazon Web Services, or AWS, which saw revenue jump 20% year-over-year. This performance significantly boosted investor confidence, showing Amazon is strengthening its leadership in the critical cloud industry. Adding fuel to the fire, Amazon announced a massive $38 billion cloud computing deal with OpenAI. This partnership solidifies AWS as a foundational platform for the artificial intelligence revolution, a narrative the market is incredibly excited about. As a result of this news, we've seen a flurry of analyst upgrades. HSBC set a price target of $300, and Mizuho raised their target to $315, both maintaining outperform ratings. These events are directly responsible for the massive price jump we see on the chart right at the end of October. Now let's turn to the daily chart to see how this news has translated into price action. Looking at the bigger picture, Amazon has been in a strong uptrend for most of the year. We can see a significant low was established back in early April around the $161 level, which acted as a major reversal point. After that, the stock rallied to a previous high around $235 in late July before entering a period of consolidation. That entire consolidation phase was shattered on October 31st. Following the earnings and OpenAI news, the stock created a massive breakaway gap, jumping from a close near $223 to open around $250. This move obliterated the old resistance level around $235, which will now likely act as a major support zone on any potential pullbacks. The price then surged to a new all-time high of $258.60 yesterday, November 3rd. This level now stands as the immediate resistance we need to watch. Let's zoom in to get a better look at this pivotal moment for the stock. This gap between roughly $223 and the post-earnings low of $243.98 is incredibly significant. This isn't just any gap, it's a breakaway gap, which typically signals the start of a major new trend or leg up. What confirms the strength of this move is the colossal volume we saw. On October 31st, volume surged to over 166 million shares, followed by another 96 million shares yesterday, far exceeding the daily average. This high volume indicates strong institutional buying and conviction behind the move. From a technical perspective, this entire gap zone now represents a formidable area of support. A move back down to fill this gap would be a significant sign of weakness, but as long as the price remains above it, the outlook is very bullish. Now let's switch to the 1-hour chart to analyze the shorter-term price action since this massive breakout. Here we can see the initial powerful thrust up to the all-time high of $258.60. Since hitting that peak, the price has entered a period of consolidation, pulling back slightly. This is perfectly normal and healthy behavior after such an explosive move. It allows the market to digest the gains and build a base for the next potential move higher. In the very short term, our key resistance is clearly the high at $258.60. On the downside, the low of this consolidation range, around $252.90, is our immediate support level. A break below this level could signal a deeper pullback, possibly to test the upper boundary of the gap we just discussed. However, the fact that the price is holding so well above the gap is a constructive sign for the bulls. For an even more granular view, let's look at the 15-minute chart, focusing on yesterday's trading action. After the market opened higher, we can see the surge that set the all-time high of $258.60 early in the session. Following that peak, there was a clear pullback throughout the day, establishing that support level down near $252.90. This intraday price action reflects some profit-taking from traders who bought before the news. However, the buying pressure was strong enough to absorb that selling and prevent the price from falling further, allowing it to close well off its lows. This price action establishes a clear short-term trading range between about $253 and $258. So, to recap and look ahead, let's bring back the daily chart. The bullish case for Amazon is fundamentally and technically very strong. The narrative around AWS growth and AI dominance is a powerful tailwind, supported by glowing analyst reports. The breakaway gap on massive volume is a textbook bullish signal. Key resistance to watch is the all-time high at $258.60. A confirmed break and hold above this level, ideally on good volume, would open the door to price discovery, with psychological targets at $275 and the analyst targets around $300 to $315. I would place the likelihood of this continued upside in the near term as high, around 70%, assuming the broader market remains stable. On the other hand, the bearish scenario would involve a failure to break the $258.60 high, followed by a break below the short-term support around $253. This could trigger a deeper correction to test the gap support near $244. A full gap fill back towards $223 would be a very bearish development and would invalidate the immediate bullish momentum. I see this as a lower probability, perhaps around 30%, unless we get some unexpected negative news. The key thing to watch for now is how this consolidation resolves. A clean break above resistance confirms the trend, while a breakdown below support signals caution. And as always, thank you for watching Explain the Charts. Please remember, this analysis is for educational purposes only and is not financial advice. You should always conduct your own research and due diligence before making any investment decisions.